What's up, guys? This is the Contrary Trader. Okay, so these videos, I'm just on my smartphone and my laptop. They're not gonna maybe be the highest production value, but I'm gonna bring some alpha here. I'm gonna bring a market perspective that maybe you haven't heard before. Um, so I'm gonna be analyzing Bitcoin and maybe some altcoins. Um, And what you're not going to hear me talk about very much is stuff like candlestick patterns, RSI, the MACD. I'm probably not going to be talking about really most of any of the traditional TA methods. What I'm going to be talking about is what works for me. Okay? So I've been honestly trading about a year and a half. Bitcoin, Forex, stocks, futures. And I've tried like every system, for a long period of time, one after another, trying different systems, losing money in different systems, some success, some loss. And finally, about after a year, I developed my own successful system. And my system has a lot to do with liquidity and liquidation specifically, and the liquidation profile of crypto. Okay, so what are we looking at here? This is going to be a whole series, so I'm not going to get into everything in this video. I'm just going to make little updates as we go. So what are we looking at here, okay? And how is this different from what you guys are probably looking at, which is the liquidation heat map. Okay, this is not the liquidation heat map. What is this? This is liquidation levels by Leviathan, okay? It's an indicator on TradingView. How is this different from the liquidation heat map that most people use, and why is it better? Telling you guys, this thing is a game changer, okay? Well, one way that it's different is that you can see the leverage that people are using in the market, okay? So another thing I'm going to be doing on this channel is I'm going to be putting on my market maker hat, okay? So I'm going to be talking a whole lot about market maker strategy, what the market maker's doing, where the liquidity is at, and what the market maker is likely doing or likely to do, scenarios, in terms of the liquidity. Okay? Because the first thing I'll tell you here on this channel is that for a long time, I didn't understand the price action. I didn't understand the price action. The reason I didn't understand the price action is because I wasn't looking at the liquidations. And specifically, I wasn't looking at the very specific liquidation data that I'm looking at here, okay, from Binance. And the reason there is, it really shows you why the market is moving in the way that it moves. Because people think that the market is fueled by retail sentiment. The market is not fueled by retail sentiment. Okay, a very small percentage of the time. They're like the fuel, okay? And the market maker takes that fuel and, he applies a spark and creates fire and a combustion engine and direction for the market. Okay? So the market maker scoops up all that liquidity and he redistributes it, okay? So what we're looking at here is a liquidation range, okay? Now, this is probably the most accurate range that you will ever get in crypto. Why? And also, what is this? Let's talk about what this is, okay? So, these are liquidations, okay? So, in the futures market, this is where people will lose their money, okay? And let me give you an example. I'm going to tie this into order blocks here, okay? So, these green things here, these are order blocks. They're bullish order blocks. You can call them buy walls. You can call them order blocks. Okay? And then these red things here, this red thing here, these red things here, those are sell walls or sell blocks, okay, that have been violated. Okay, you can see that price has broken them, and so they do not extend to the edge anymore, all the way to the edge. So they've been broken. So we were in this little, and that'll also tell you where we're consolidating, because sometimes there'll be like a bullish order block on the bottom here, and there'll be a bearish order block on the top here, and you'll see that the price will just be bing bong in between them. Okay, shout out to Frankie Candles, bing bong. And so let's look at these bullish order blocks here. So the market maker placed a big buy here at this first green order block, and then another big buy here, slightly smaller because it's not as thick, and another big buy here. Okay, so that's him making the market. Okay, that's where he's placing his big buys. I'm just on the 1 minute right now, by the way, just because I want to see the granular liquidation data. But I could also go to the higher time frames and look at the larger time frame order blocks. So people that have placed their orders in the same area, the market maker made these blocks. Other people FOMO'd in, okay? And then down here is their liquidations. You can see that the red ones are the closest to the price action because those are the 200x liquidations, okay? And now, another thing I'm going to speak on now is induction moves, okay? So what I want you to look at right here is, you can see when the market maker made this big, we're on a weekend right now, so most of these moves are induction moves, or fake outs, people call them. When the market maker made this big move up here, this big spike, people said, oh, FOMO, and they went long. FOMO, and they went long. And you can see down here, below the price action, you can see here that a bunch of new little red lines were created. You see that? So you can see in real time there on a granular level, people entering the market with very high leverage longs from this induction move here. And the market maker sees that as well. Okay? If you're using this, you see the same thing the market maker sees. Okay? And you can also see that down here there is a very large cluster of them. See this? This is a very large cluster. So it really makes a big difference to look at this, because this is what the market maker is looking at. Okay? This is an X-ray, the behind the scenes of what's going on in the game. Okay? The buy and sell blocks are where the market makers place their orders, or people have FOMO'd in on top of the market maker. And then you can see their liquidations appearing, near the price action. Okay? So that's the first thing to look at. So what's the market maker trying to do? Okay? The market maker is trying to take as many of these liquidations as possible. Go through as many of these lines as possible. Okay? You understand? And then after they do that, they want to redistribute what they just collected. So basically, the market maker, wants to move they want to induce in a range, okay? And you can see on both sides, both longs and shorts are coming in. You can see with these moves here, you can see a whole bunch of new shorts just came in up above, and a whole bunch of new longs came in below, okay? So all the market maker really has to do to induce is to stay in a pretty tight range and make sharp moves up and down. And people on both sides are going to say, oh, I'm a short, oh, I'm a long, and they're going to come on both sides. And you're going to see these lines getting thicker and thicker and thicker. As we go through the weekend, you'll see these liquidations get thicker and thicker and thicker, okay? Until Sunday night, there'll be a big move, and then it'll start into the week. They'll start consuming those liquidations. So I'll talk more about all this in the future, but what's going on right now with Bitcoin? Okay, let's look at the whole enchilada here. Okay, so this is the range that we're looking at, guys. Okay, so we're looking at a range from 105 to, oh, I can't really see there. I gotta pull it down a little bit. 105 to 115. I'm calling 115.7. Okay? So that is the active range of Bitcoin right now. Okay? There are orders outside that range, but the main cluster of orders and liquidations and stop losses is within that range. You understand? It's a $10,000 range right now. Okay? So we can go above that, we can go below that, but not usually instantly. And what I mean by that is, if we're going to come out the top of that range or out the bottom of that range, it's in a zigzag pattern, meaning we come up to the edge and then we consolidate, and then more orders and more liquidations appear above or below, and we consolidate, and then once it's reached a certain threshold of, liquidity, then we can continue the move. But it doesn't happen instantly usually. We stay within almost always these liquidation ranges on the short term. Okay? So what are we looking at here in the immediate? Well, first of all, you can see, wow, they just got a whole bunch of people to FOMO in when they just made that spike up and down there. They probably just doubled the liquidity, the 200x liquidity in the immediate environment there. I don't know if you guys can see that, but it really got a lot thicker. Okay? And you got a lot of people FOMOing in long down here. So now what is important to look at right here when you're looking at the liquidation range? Well, the first thing I want to do is I want to look at the 200x liquidations. Okay? That is the red ones. Okay? And I want to say on which side is there more. Okay? I can just visually look. And you can tell right now there's definitely more to the downside, below the price action there. Okay? Definitely more to the downside. Okay? And what does that tell you? That tells you that the market maker's target is to the downside. Okay? Now we just had a big move down. We're in fear. But look, people are still FOMOing in long, even on a weekend. So what does that mean? That means that we're not at max pain yet, dude. That means we haven't hit the bottom yet. Okay? Because as long as people have not reached max pain and they're still FOMOing in long like that, the market maker is going to target it. And he's going to bring it down more and consolidate a bit more and do a couple more spikes up, a couple more induction moves, and then smash it down and take more liquidations and smash it down and take more liquidations. That's the game, guys. You got to see the game. Okay? This is the game. It's not about, you can use the RSI and head and shoulders is bullshit to me. Like head and shoulders and candlestick patterns, those are things that the market maker uses to try to trap dumb money. And by the way, I want to mention, I'm not like an ICT trader. I'm not like a smart money technique trader. Like I call it smart money, but it's really just, I use liquidity and I use order blocks and stuff like that. But it's not specifically from like the smart money technique system or like the ICT system. It's just my technique that I've, come to use through using liquidity. So what else can I say? The other ones, the orange ones, are the 100x liquidations. Those are secondary targets, especially if they're thickly clumped. You can see that they are thickly clumped on both sides. And then the blue ones are 50x liquidations. Those are not as much of a target, but they still are, especially, again, if they're thickly clumped. Excuse me. Or if we're coming to the edge of a range, sometimes we'll take, a chunk of the 50x. But they really don't want to go too far into the 50x and too far into the edge of the liquidity profile, because they need the orders to reverse it back out. And usually 50x is not thick enough liquidity for them to reverse it back out. For them to make that big wick and their big buy or sell to reverse it. Let's see, what else can I say here? Well, like I said, we do also have this little chunk up here of 200x that we left up at 111. I'm sure we're going to revisit that at some point. And also this is thick as heck. We're also going to revisit that at some point. just like giving you some like possible targets. But for the immediate term, like I said, the liquidity is mainly to the downside. You can see that it's thicker to the downside. And so you have to think of everything in terms of like reversals and in terms of plays. So sometimes, for example, a lot of the times, for example, if they're going to take the downside liquidity, they'll actually move it up for one final induction move and take a tiny piece of the topside liquidity, like they're going to take the topside liquidity, but then just use those orders and liquidations to reverse it back down with a little bit of momentum down into the downside to take the downside liquidations and the longs. And they use those that little bit of liquidations as momentum to reverse it down into the longs, and as one final induction to induce like the last few longs is like FOMO. So knowing that we have more liquidations to the downside right now, down to, like I said, down to about 108,000 for the 200x. That's our immediate target. And if we take some of the top side, like I said, that's going to be perceived as a fake out or a lackluster, retracement, as Frankie Candles will call it. And then our next target is at about 108 to 107. So the first target is 109 to 108. Okay, that's the highest liquidations there, highest leverage. Okay, 108 down to 107 is kind of secondary target. If we do come up here above price, there also is, like I said, a good chunk up there as well. So that's also a secondary target. But, assuming we're going to chop through the weekend and assuming maybe we're going to inflict max pain into Monday for the market open, Sunday night or Monday. I would assume that Sunday night or Monday, hopefully if we're going to get a good bounce, we'll take a chunk of the upside liquidity, fake out, reverse down, do another crash, absolutely wreck sentiment because we're already in fear, going into extreme fear. Get down into extreme fear, probably wick down through the 200x liquidations, through the 100x liquidations. There's a little gap here. And then maybe one final push down. Maybe we just wick down to 106 or even 105. I wouldn't expect 105. Maybe if we build up some more liquidity, just because that's so close to the edge of the range, that's too close for them. They need a little bit. Well, we could definitely take a chunk. We could bounce a week down to like 105, and SPF up from there. But yeah, guys, that's my immediate targets if we do end up taking the upside.
Gmail prolific.
Or if we take the downside and reverse back up, targets to the upside are, let's see, 109.7 to 110.5 for the 200x liquidations, 110.5 to 111.5 for the 100x, and then we have that little cluster of 200x and 100x at about 112. Another pretty thick cluster of 50x at 113.5 roughly, and then thin above that, so I wouldn't expect really any moves above 115. All right, so that's your immediate range. That's your immediate range, guys. That's what I would look at going into the weekend for now. I'll make another update video soon, and we'll talk about what the market maker may be doing. And it looks like we are possibly trying to break some of these buy order blocks here, these buy walls. You can never really tell if the market maker is just doing another induction or if they're actually going to break them or not. You got to wait for the close and wait to see if they break. See, now it's bouncing. It's bouncing on the order block there. Okay. I also have my little market site for my fake market site for B down here, just really for the money flow. I use different things: CVD, volume, money flow, OBD, unbalance volume. Oh, whatever the letters are. Anyway. Oh wait, you can actually see there, guys. We actually did create a little sell wall up here on the 1 minute. So now you can see our tight little range that we're currently in here. We're kind of bing bong in between 109.4 and let's see, 109.5. So it's like $1,000 range.
Gmail prolific.
We'll either
Gmail 2 new messages.
We'll either break these. Sorry about that. We'll either break these buy walls here, downward, or we'll break the sell wall above. But those are where like the major orders have been placed by the market maker. Okay, guys. All right. Well, I'm gonna check in with you guys later. Hope you guys liked the video. If you like it, like, subscribe. Be more videos talking about this and liquidity and what the market makers are doing. All right. Not financial advice, guys. This is just for general entertainment and information, not financial advice. Peace.